Okay, I don't know what's happening, but I'm gonna keep going. So, cost of owning and operating a motor vehicle. You want to look at the fixed cost depreciation. So as soon as you drive your car off the lot, the value depreciates. So when you want to resell it, it's going to be less. Your interest on the loan, if you're buying with credit and not cash. Your insurance, your registration fee, license, and taxes. But also you want to take into consideration when you have a car, you have to pay for gas. You have to get your oil and your transmission fluid, steering wheel fluid checked, tires, maintenance and repairs, parking and tolls. So it's way more cost added on. The 2010 rule also applies to your car. It applies to everything in your life. You never want to borrow more than 20% of your yearly net income, and your monthly payment should not exceed 10% of your monthly net income. Okay? Consumer decision making. Deciding to spend your money. Do I need it? Is it worth the time? Do I want to buy a car right now? Or do I want to keep going my used car, right? Is there a better use for my money right now? Deciding on the right purchase. What level of quality do I want? So if you get like a luxury car, you will spend like $2,000 for something that somebody else might spend $200 for because the parts are way higher. What level of quality do I need? What types of services and repairs does the dealer offer? All of these questions you want to take into consideration when getting your car. So shopping for a used car. Before you begin shopping, decide how much you want to spend. Do not go in there going all with the flow with the person. Decide which car model and options interest you. Shop for financing. Know how to read a buyer's guide sticker. And then as you shop, you want to find the reputation of that specific dealer. You want to make sure you're not getting a car from Matilda's dad and it breaks down while you're driving away. Okay? Sources of used cars. You can do a new car dealer. You can do used car, private, which I'm about to do. I'm about to sell my car. Other sources such as auctions. Oh, I got my first car from an auction. It was so fun. And I won $1,500. Auto rental companies. So like Hertz right now, because of quarantine, they're like running out of money. So they have to sell a lot of their cars and people aren't buying. People aren't renting cars, obviously. No one's traveling. All right. So here's warranties. I know you have some questions on your form about warranties. As is warranty. It's no expressed or implied warranty. If you buy a car and have problems with it, you may pay for repairs yourself. Some states do not permit as is sales on cars. So warranty is like, hey, I get this money back if my car breaks down. As is would mean I'm selling it to you as it is. It's your problem. Now, implied warranties. Warranty of merchantability or product will do what it is designed to do. Warranty of fitness for a particular purpose, always in effect unless the product is sold as is or the dealer. A dealer warranty, that's the big one, is offered and specifically written by the dealer. So maybe you have a warranty on the tires, maybe you have a warranty on your transmission. Terms and conditions vary greatly and useful to compare warranty terms. Unexpired manufacturer's warranties. Manufacturer's warranty can sometimes be transferred to the new owner. Okay? So then you have extended warranties. So shopping for a car loan, you're going to look at the APR rate. So like here we see length of the loan. You could do 36 or 60. And obviously to be double the shorter term you want to do. So total finance charge would be here. And then your total amount that you would pay would be there. Okay. Cool. So how to calculate the total cost of a loan? You would do the amount of the loan times the APR, 10%, times the years you're going to spend paying, which is $5,000. So then you're going to do that amount of loan times the $5,000, and your total amount you would spend on that car is $15 because you just calculated your APR times your loan. Okay. Truth in Lending Act. Act requires lender to inform the borrower. So these are all the things that you must they must tell you when you buy your car. The amount financed, what charges are included, total finance charge, payment schedule. Okay. Liability. So insurance coverage. You have some slides on here. 40 to 50% of premium. Okay. So sometimes it'll just cover half that amount. Bodily injury coverage, property damage coverage, collision. You have up to 30% of the premium covered. Pays for physical damage to your car, as a result of an accident. Limited buyer deductible. Comprehensive pays for damage caused by vandalism, hailstorms, floods, theft. So let's say kids are outside breaking windshields, right? That 12% of your premium will be paid out to you. Your medical covers your medical payments for driver and passengers in the incident. Uninsured motorists reimburses you for bodily injury and accidents caused by uninsured drivers. You would not want to be in an accident with somebody that don't have insurance because they can't pay for your damages. You will have to pay them yourself through your insurance. Rental reimbursement pays a specific amount per day to rent a car while yours is being fixed. I've had to do that multiple times. This is how your insurance rates are set. So you got your age, sex, your marital status, personal habits, type and frequency of vehicle, your geographic location, driving record, number and kind of violation. So like my insurance is really low because when I was in college, I could submit my grades to get discounts on my insurance. So when every A I had, it was like $50 decrease in my insurance. It was really, really beautiful. And also never had an accident I caused, right? So all of those things will lower your insurance. Repossession. So if you borrow a car and you are not paying or you go default on your payments on your car note, they can seize your car. You can't commit to a breach of peace or physical force. You can't fight the guy taking your car. Can keep or resell. You may not keep or sell any personal property in the car. So if you have very important items in the car, you cannot keep it. You're right. You may buy back the car by paying the full amount owed. Okay? So these are just some advantages and disadvantages to owning a car. Smaller initial outlay than down payment when buying on credit. Your monthly lease payments may be less than your monthly finance payments. So this is leasing. I always wanted to lease a car. So the disadvantages of leasing a car would be no ownership interest in the vehicle. So you kind of borrowing the car long term. It's like long-term rental. You must meet requirements similar to applying for credit, and additional costs occur, such as for extra mileage, repairs, ending lease early. So leasing versus buying. You must decide which option makes the most sense for your situation. Do you have cash available for a down payment? How much of a monthly payment can you afford? How long do you plan to keep the car? So that's basically it, guys, when it comes to the car buying world and loans. Tomorrow will be your last lesson, and I hope you have a wonderful day.